I know times like this you just take it slow. I fall asleep in the pillows. She got my heart in a chokehold. And there she goes.
Assalamu alaikum. Hello everyone. This is Liquidity by Ahmed Shawi. Today is Sunday, the 7th of April 2024. I'll be doing the weekly market review. This is going to be also covering crude oil, gold, and Bitcoin on a macro outlook. So let's get started. Starting with DXY, here we have the weekly time frame chart. You can see we have a rate on the stops of this buy side liquidity. As I've mentioned in the last weekly review, I mentioned that we can see price respect the consequence of that premium wick, or it can rally up higher and take the buy stops that are residing above this buy side liquidity. And we in fact seen price trades up higher and take out the buy side liquidity here, and we've seen a retracement from there. So going to the daily time frame chart, you can see we took the buy side liquidity and then we broke down lower, bearish order block, fair value gap. From here, I'm potentially seeing signs of a sell program in DXY targeting lower prices. We have the sell side liquidity here. We have the weekly fair value gap, the sell side liquidity, and just below the sell side liquidity, we have the refined fair value gap on the daily time frame chart, and we have the major sell side liquidity right there. So this is what I'm looking at in terms of the DXY, and you can see also on the weekly time frame chart, the weekly bearish order block. We're revisiting that bearish order block. So from here we can see lower prices attacking this low, the fair value gap, this low, and the major sell liquidity right there. So that's gonna be pretty much it for DXY. Going to ES, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see how price traded and took out the buy side liquidity of last 2 weeks high, and then it started breaking down lower. You see the weekly fair value gap. Going to the daily time frame chart, you can see how it took out the buy side liquidity and started breaking down lower. I want you to pay very close attention to that high and how price took out that high on ES, because I'm gonna be referring to that high and the relationship that it has done and the relationship with the other markets, in NASDAQ and Dow Jones. So just remember how price has taken out the buy side of the here and started breaking down lower. Bearish order block, bearish breaker, price traded via fair value gap, and we're gonna be starting treating this fair value gap as an inversion fair value gap, because we rallied up higher, treated it as a normal fair value gap, treated to the constant corner of that fair value gap, and then we rallied up higher and took the buy side liquidity. From there, we started breaking down lower, and we closed below that fair value gap on Thursday, and on Friday we treated it as a resistance. So we start to treat that inversion fair value gap as a resistance, and last line of defense would be the inversion fair value gap, the consequent corner of the inversion fair value gap. From here, I'm expecting some kind of lower prices attacking these lows right there, this fair value gap, the remainder of this fair value gap. We have these lows here, so we can potentially start seeing sell programs start from here. So that's gonna be pretty much it for ES. Going to NASDAQ, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see, first thing you will notice that price didn't take out the highs that are right there. Going to the daily time frame chart, you can see price just forming lower highs, whereas ES has formed a higher high here and then broke down lower. So what price has done here on NQ, it's showing lower prices, it's showing weakness to the downside, which means it doesn't have the strength to take out the buy stops. It doesn't need to, because it's already heavy to the downside. And you can see how it's trading down lower. You can see even how it traded to the constant and then retraced really hard. But if you see the ES, it traded just above the constant current, which shows that it's not really weak to the downside when compared to NQ. NQ is really showing weakness. It's showing strength to the downside. It wants to trade to lower prices. So you can see how we didn't take out the buy stops, because price doesn't need to take out the buy stops. It already have so much positions, so much short positions, and it wants to offset them below the sell side liquidity, below these lows, below this low and below this low. Just below this low you have the fair value gap, and you have also this fair value gap between this candle's high and this candle's low. This would be what you would also be targeting. So from here and potentially see some kind of a lower prices attacking these levels that I just mentioned. So that's gonna be pretty much it for NASDAQ. Going to Dow Jones. Here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see price took the buy stops right there and stop breaking down lower. Going to the daily time frame chart, you can see buy stops tagged right there, and then we broke down lower. Bearish breaker, bearish order block, price traded to the bearish breaker. The fair value gap, you have a very small fair value gap between this candle's low, this candle's high, and from there it broke down lower, took out the sell stops that are residing below here. Everything has happened in just 1 week. Now you might see why regarding Friday we had NFP. You wouldn't see that much effect on indices when compared to the forex market because they're straightforward trading, and we see the results and the reports that are really linked and synced with the dollar index. So you can see how price immediately balanced, and from here you can see a continuation to the downside attacking sell side liquidity, sell side liquidity. Just below the sell side liquidity you have the fair value gap, and eventually the sell side liquidity. That's what I'm going to be looking at for now on Dow Jones. So this is probably showing me the signs that we are potentially starting to see lower prices. Now we can start consolidating. This doesn't mean that we're gonna be starting the sell program and we're taking this for granted, but we can see some consolidation. Now, what would be telling me that we are likely to see lower prices? Because as you can see in the past about 6 months, we've been seeing higher prices. Even on NQ, you can see since mid or the last week of October and until now, we're just continuously printing higher prices. So it would be expected to see price start break down lower, went down, and start attacking and engineering interest by taking out the sell stops or the sell side liquidity. So that's gonna be pretty much it for Dow. Going to Euro USD, also known as the fiber. Here I'm viewing the weekly time frame chart. You can see here's the effect that you would see from NFP on the pairs that are really linked and synced with the US dollar index. You can see that this week we have an outside week where the high is higher than previous week's high and the low is lower than previous week's low, which means they smart money or the market makers attacked both sides of liquidity. Now next week we might see some kind of a consolidation that can potentially accumulate the price or engineer liquidity. After that, we can see price break down lower a little bit, tag in the sell stops, and then rally up higher. I'm favoring higher prices in Euro USD and Pound USD, and I'm favoring lower prices or a sell program in DXY. So retargeting this high, this buy side liquidity, we have the fair value gap between this candle's low, this candle's high, and this buy side liquidity and this major buy side liquidity. These are the targets for what I'm aiming at regarding EU. Going to the daily time frame chart, you can see the refined fair value gap, how we traded the refined fair value gap. We didn't actually touch the monthly fair value gap. We have the bullish order block right there. We started higher. You can see from the low, then we broke up higher, took out this high. We have a bullish order block, fair value gap, price to the bullish order block on NFP, and then it retraced up higher. So I'm favoring higher prices on EU and on Pound USD. I'm going to be later showing you Pound USD. I'm favoring higher prices, taking the targets that I've just mentioned earlier. The fair value gap this high, the fair value gap this high, and this major buy side liquidity. So that's going to be pretty much it for EU, or also known as the fiber. Going to Pound USD, also known as the cable. Here I'm viewing the weekly time frame chart. You can see the same thing has been mentioned here on Pound USD. You have an outside week where the high is higher than previous week's high and the low is lower than previous week's low. So market makers or smart money, they in both parties, both sides of liquidity, the buy side liquidity and the sell side liquidity, we can see potential price consolidate or engineer some kind of an interest in the market by forming the holding pattern. As a result, this will indulge retail traders to be part of the markets, and then we will likely see price trade down lower, take out the sell stops, and then rally up higher for the buy side liquidity and this buy side liquidity. Going to the daily time frame chart, you can see the same thing is mentioned here on pound USD, bullish order block, fair value gap. You can see how price traded to the bullish order block and the fair value gap, and it touched one more time the weekly fair value gap, the high of it, and we have a bit of a mohawk here. And then from here, I'm potentially seeing price attack higher prices. We have this high, this high, this high, and as I mentioned on the weekly time frame chart, this high also. So I'm favoring higher prices, although you can see that we are in consolidation since the beginning of the year and until now. It's just been consolidation. You can see once we entered 2024, you can see like the price action is not really favorable for anyone to be part of. Sure, you could be taking some trades, you could be scalping, but this is not a high probability condition to be part of. So regardless, gun to my head, I'm favoring higher prices attacking this buy side liquidity. Although price can just from here can break down lower and start reaching for lower prices. We have the sell side liquidity here, sell side liquidity here, but I'm wanting higher prices on pound USD and euro USD, and I'm wanting lower prices on DXY or the US dollar index. So that's gonna be pretty much it for pound USD, or also known as the cable. Going to gold, here I'm viewing the weekly time frame chart. You can see pretty much what's happening in gold is just constantly rallying up higher. And just for your info, gold is not actually sitting at its actual true value. So it's being held by market makers, it's being held by smart money, it's being held by people who have more power than us. One of those people are the BRICS nation. Now, for the people who don't know, BRICS nation are currently accumulating gold to back up their currency. And what would be a better choice to back a currency than gold? So what they're doing now is accumulating as much gold as possible at the actually it's a really cheap value right now, that price, which is a really fabricated artificial price that they're holding price at, so they could be accumulating as much gold as possible. And then from there, once they announce their currency that's backed up by gold, you will see gold actually repricing immediately to its true value, which could be 10x of what you're seeing right now. It could be 15x. No one knows what is the true value, but I'm sure that this is not the actual true value of gold right now. And one of the other reasons why we can see going up higher is that when crisis happens, when war happens, gold will be running up higher. Since October here, you can see what happens here in October, the geopolitical events that happened in that month last year, the things that happened in Palestine. As a result, you can see how price from the rejection block started running up higher from there, and until now, it's continuously running up higher. And a few weeks ago, you can see that what happens in Russia, the terrorist attack that happened, this can also as a result ra- made gold rally up higher. So this is mainly driven by the economic, or let's say not the economic, by the geopolitical things or the events that are happening around the world mainly. So we can continuously and constantly look for higher prices on gold. There's no old because we're already at the all-time high. So there's no price in the past that is higher than this level. And in that territory, it's a new discovery for me. So whenever price forms a high and it retraced, so it retraced to the bullish order block, you can buy that and you can aim for that all-time high that was recently formed. That's how we trade it. So that's gonna be pretty much it for gold. Going to crude oil, here I'm viewing the continuous contract and I'm viewing the weekly time frame chart. You can see since we've been trading here at the bullish order block, since the beginning of the year, I told you we're looking for higher prices. We have the fair value gap. See what the fair value gap here is not really in its right position. It should be at this down close candles low and this down close candles high. So between this candles low and this candles high, the fair value gap, but here it's not really shown properly, as you can see. So since the beginning of the year, I told you that we're looking for high prices. We attacked the buy side liquidity. We attacked the second buy side liquidity, which is the relative equal highs. And we have just above this relative equal highs, we have the fair value gap, which is between this candle's low and this candle's high. You can see how price attacked it, and then the volume imbalance, we attack the volume imbalance. Next is the major buy side liquidity and this major buy side liquidity. Now, I would also add one more price level, but I would like to keep the charts clean. We have the consequent correction of that premium wick. Also, you would be targeting that as a potential draw on liquidity. Now, I'm calling levels, but that doesn't mean that I'm taking trades in that market because I'm a specialist in one specific market that I'm trading, but I'm able and I can identify where price is going to be turning, the turning points, the areas where it is probable for me to be part of, let's say, being a buyer or being a seller. That doesn't mean that if I can call out the markets that, let's say, potentially crude oil will be running up for this buy side liquidity, and I've been calling it since we've been trading at the weekly bullish order block right there. This doesn't mean that I've been long in this market. This means that I'm trying to provide value for you. I'm trying to provide insight for you so you can be potentially in the future, you could be reading price action. We could be reading the markets the way I do, because whatever market you throw at me, I can read the markets and I can get to an idea, get to an conclusion of where price is trying to reach for, unless if the conditions are messy and it's being chopped up. And at that kind of situation, I'll just tell you that I'm not, I don't want and I don't prefer to be part of that market because it's not showing me the high probability conditions that I want to be part of. So this just show you that I'm trying to provide value, I'm trying to provide knowledge, but I'm trying to provide experience, I'm trying to provide insights for you so you could be using it for your own sake. So going to the daily time frame chart, you can see volume balance traded close above it. Next on Thursday, we trade down lower, filled that volume balance as support, and then we roll it up here. So we have also the fair value gap. You can see how price straight into the fair value gap. Next would be this major buy side liquidity and this major buy side liquidity. And as I mentioned on the weekly time frame chart, the consequent encouragement of the premium wick. So that's gonna be pretty much it for crude oil. Going to Bitcoin, here I'm viewing the monthly time frame chart. You can see last time I talked to you, we're trading right there. I told you next would be the buy side liquidity, the fair value gap, the rejection block, and the major buy side liquidity, which is the all-time high. And we in fact seen all the targets hit in just a month since I've called out the levels, and until now price took out the buy side liquidity. So also I wanna mention one more thing, that this month, in about 2 weeks, we have the halving. Now, this is an event that takes place in Bitcoin in about every very specific date of the horizon, where the rewards for mining Bitcoin is going to be cut in half. So this means, as a result, the value of Bitcoin will be rising up higher. But this doesn't mean always it's going to be rising up higher, because we many times see that price, whenever halving happens, we see price trade down lower to engineer liquidity and to take out more positions, so then later it can run up for the buy side liquidity. So I'm not trying to anticipate really to that extent, but what I've mentioned is that we're in a buy program. We can see some kind of consolidation here in Bitcoin before we can see a retracement, or we can see a reversal all over. So that's gonna be pretty much it for Bitcoin. Now, I just want to also mention one more thing, is that next week on Wednesday, the 10th of April 2024, we have CPI, and on the next day, which is Thursday, the 11th of April 2024, we have PPI. Now, regarding PPI, it's not really as important as CPI, but it's still important. But what matters for me the most is CPI. Now, on CPI, you really want to be some kind of part away from the markets, because it's gonna be really fast and really volatile when the reports hit the markets. So this is gonna be pretty much it for this weekly review. I really hope you found this one insightful. Until I talk to you next time, be safe. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.